colleagues Shruti Mishra and Ritu Singh. Here are the top headlines from the startup space. BlackRock hands a sharp 95% cut to the valuation of BYJU'S. The troubled edtech company's valuation has dropped from $22 billion to just $1 billion in less than 2 years. Amazon is laying off 5% of the workforce. At Audible, Business Insider reported, the news comes a day after the e-commerce major said it would lay off hundreds of employees in its streaming and studio business. Discord, the social chat and messaging startup, is cutting 17% of its staff. Roughly 170 jobs will be affected by the layoffs, according to an internal memo sent by the company's founder and CEO, which was seen by the New York Times. Google to extend the grace period for pilot real money gaming, daily fantasy sports and rummy apps in India till June so that developers can comply with local laws and the company's updated policy. Google Play will begin supporting more RMG apps this year, including game types and operators not covered by an existing licensing framework. Personal care brand The Body Shop has joined ONDC network through Shopperlist's plugin. With this move, the company is looking to create multiple consumer touchpoints. Upskilling platform Simply Learn appoints Mark Moran as Chief Marketing Officer and Veerasundar V as Chief Financial Officer in a bid to expand its future growth. The appointments come as it saw losses grow 29% to Rs 244 crore during FY23 as compared to Rs 179 crore in FY22. Britain's competition regulator plans to make big tech companies give their rivals greater access to data and limit them from promoting their products under new laws. It is due to receive from the government. Well, those were the headlines we were tracking for you this evening. The top story tonight: BlackRock has marked down the value of its holdings in BYJU'S, slashing the valuation of the edtech startup to a staggering $1 billion. This is a massive fall for BYJU'S, which became the world's most valued edtech startup at $22 billion in 2022. Not the first instance of valuation markdown for the edtech. BlackRock, which owns less than 1% of BYJU'S in May 2023, had slashed its valuation by 62% to $8.3 billion. In November 2023, Prosus had downsized the valuation of the edtech firm to below $3 billion. Prosus had then said BYJU'S is a more challenged business and is confronting several headwinds. Peak 15 had also told its investors in its funds on July 26 that it is marking down its investment in the company over lack of visibility into the audited financials. BYJU'S is amidst a plethora of troubles. In a high-drama annual general meeting held on December 28th, investors of BYJU'S grappled with a tumultuous session lasting 3 hours. The meeting featured a series of resolutions, most notably the approval of the audited FY22 financials, which passed despite shareholder concerns over auditor issues. BYJU'S on November 4th had finally released its financial statements for the financial year 2021 to 2022. The company reported an EBITDA loss of Rs 2,253 crore in FY22, about 6.36% lower than Rs 2,406 crore loss it reported in FY21. Now, it's important to note that the results are that of BYJU'S core business operations and do not include its acquisitions.
Well, home appliances startup Atomberg Technologies has joined hands with the Board of Control for Cricket in India, or BCCI, as one of the official partners for the domestic and international season 2024 to 26. Now, Atomberg has signed this 3-year deal with the BCCI, and their partnership is going to begin with the upcoming match, that is the T20 series against Afghanistan, starting the 11th of January. Joining me now to talk about this interesting partnership and what it means for the company is Arindam Paul, the founding member and Chief Business Officer at Atomberg Technologies. Arindam, thank you very much for joining us here and congratulations on the partnership. You had this 3-year deal with the BCCI. Needless to say, we are a cricket crazy country and we love it. Millions watch it. So a tremendous opportunity, of course, for a brand to be able to get visibility there. Number one, tell us what the deal entails and what this will mean for your business.
Yeah, thank you for having me here. I think it's a big moment for Atomberg to partner with BCCI and be part of India home cricket. So we have always been associated with broadcast cricket over the last 3 years. In fact, the brand has been built on the strength of broadcast cricket by being sponsors to a lot of marquee series over the last 2-3 years. And we have reaped the benefits of that as the brand has grown by almost 10x in the last 3 years. As part of this deal, I think we get access to multiple things. I think most importantly, a lot of presence on ground across the pitch mat, or say a lot of your press conference backdrops, a lot of backdrops, all collaterals for any India home cricket will feature Atomberg prominently, because you have only 5 or 6 sponsors for the entire home cricket, right? So the share of voice that you get is disproportionate. On top of that, you get access to branded awards for the cricketers and for every match, wherein you can integrate your features. You get access to the player images, which you can use for your trade collaterals, your hoardings, and a whole host of other things.
Oh, no doubt about it. Every time we switch on the television or wherever we're watching cricket, we're going to see your logo there. But, take us through the financial contours of the deal and what it entails for the company.
Yeah. While I'll not be able to divulge the exact financials, but since BCCI is anyways, I think you will have it on their website and all. So I think the tender amount started from around 75 lakhs per match. I think that was the tender document which was there. We'll not be able to quote what we finally got it for. I think you will find it in the public domain. But it's tentatively in that ballpark between 75 to 85 lakhs per match.
What your ad spends are going to be like over the next 3 years or so, taking into account this deal and I'm sure other things that you're doing on the side.
Absolutely. So I think when we look at overall media spends, right, because we're a fairly younger brand compared to a lot of legacy brands in our category. The legacy brands have been built over a period of 50, 60 years, and we are aspiring to get the same kind of brand awareness that those brands are built in 50 years, in say the next 3 years, 4 years, 5 years, right? So as a percentage of revenue, our media spends mostly is in line of say 6 to 8% of our revenue. Our revenue numbers are there in the public domain, so I think you can make it. So tentatively, we're looking at a media spends of around 150 to 200 crore over a period of next 3 years.
At Atomberg, you have your smart premium fans, you have your mixer grinder, smart locks, and so on. Give us a sense of how you plan to grow the business both online and offline. You're already present on all e-commerce platforms, multiple retail stores. What next? How do you plan to grow from here, even in terms of boosting your manufacturing capability?
Yeah. So I think manufacturing side, we are fairly sorted for the next couple of years. We have India's largest BLDC fan manufacturing plant in Chakan, and it's a state-of-the-art manufacturing plant, which I think we're sorted there on that front. On the sales and distribution front, I think we'll be expanding further. So say today we'll be close to around 30,000 odd counters. We'll expand it further in the next couple of years. We'll get into more and more towns. So there are many 1 lakh population towns where Atomberg is still not present. We'll get into those towns as well. We'll expand our reach in fans in a much deeper way. This is for the fans category as such. When it comes to say locks and mixer grinders, it's still early days for those. I think there it would be more critical to get to PMF, have very strong product market fit in those categories. And only once we are very sure that we have the right product market fit, we'll start our expansion in those categories in the offline space.
Okay, Arindam, before we let you go, because this is a BCCI partnership, I have to ask you, your association with cricket, what's your cricket story? Have you been a big fan your whole life? And who's your favorite cricketer?
No, I think so. All of us have been cricket fans. Any Indian is a cricket fan, right? And my favorite cricketer growing up has, of course, a lot of my age group has been Sachin Tendulkar. So I think all of us have been big cricket fans. Our trade are full of cricket fans. Our team is full of cricket fans. I think the whole country is full of cricket fans. And we are really hopeful that this association will go a long, long way in building the equity of brand Atomberg that we visualize to help the brand become one of the market leaders in the segment that we operate in.
Well, life does come full circle from being a fan to having your, company's brand there, in the cricket stadiums there. Thank you very much, Arindam, for sharing your thoughts here with us. It's been a pleasure talking to you. Thank you.
Thank you.
Moving on, India's creator economy is experiencing rapid growth with a diverse range of creators across various domains, including influencers, vloggers and artists. On the hot seat today, we put the spotlight on Collective Artists Network's creator marketplace, Big Bang Social. The venture claims it is India's first creator super app and provides creators with tools, resources and opportunities to monetize their assets and increase revenue streams. And to tell us how, joining me now is Vijay Subramaniam, the founder and group Group CEO of the Collective Artists Network. Vijay, welcome to Startup Trade. Before we talk about the Big Bang social app, let me first ask you about the Gruha's Collective Consumer Fund that you just announced. You've partnered with Nikhil Kamat's Gruhas. The fund, with an initial investment of 150 crore rupees, aims to nurture the next generation of consumer brands. If you could elaborate on these plans, how many startups are you looking to invest in, and what will be the ticket size of the investments?
Thank you for having me, Shruti. Yeah, today is an important day. We just announced our fund. Nikhil and I met over a year ago. I think the hypothesis was very simple. I wanted to understand a way of connecting India's version of Silicon Valley, which is venture capital, with Hollywood, which is, in our case, the entire entertainment and media sector. And I think organizing efficient capital was the best way of doing that to power consumption. We've been in the business of growing consumer brands now for over a decade, so have an entire understanding of how consumer brands fundamentally function and how do you grow these brands. So our thesis is to back young entrepreneurs at an early stage. On the thesis, we intend to invest up to $1 million in these startups at an early stage.
And how soon do you start investing now?
We've already started investing.
Okay.
It's not given as two partners. We have been fairly aggressive with our own commitments to the fund. So we've already started the process of investing, and now we are also onboarding other investors on this.
Let's quickly talk about the Big Bang social app that you claim is India's first creator super app. Take us through its innovative features and services. How is it a game changer for creators?
Yeah, I feel this creator economy has been a bit of a buzzword for the last few years. I think internet and the adoption of it and what Jio has done over the last few years has kind of increased the penetration and ease of making content. The idea was not to create something on influencer marketing, but something that can actually impact and actually create an industry. So the idea, if you look at the architecture of Big Bang Social, is not only do you have the best collaborations for creators to monetize and make money, and that just comes because of the strength of Collective of working with large brands and corporates over the last decade and a half. We also provide room for upliftment and upskilling. So there's an academy section, there is a monetization section. We also provide creators very interesting experiences, right from movie premieres to concert tickets, to backstage invites, to red carpet invites. We also are now sort of having our own kind of reward program that's really monetizing them. And most importantly, we're providing them with a lot of data where they can actually create better and better content. I think in India, the creator economy business has been wrongly associated with only influencer marketing. I think influencer marketing is a part of it. But I do believe my vision for Big Bang Social is to have 200,000 people who get employment by creating content.
So you're sort of streamlining India's largely unorganized creator ecosystem, and you mentioned monetization. So tell us, how are you enabling that and revenue growth for creator businesses? On an average, how much money do artists make on the platform, if you could give us a use case?
Just on the creator side, right, which is the micro, nano, macro creator side, we'll be powering close to 200 crores this year, which is approximately, I would say, 15 to 18% market share of the overall influencer marketing pie. So I think today it's still a small pie. The monetization is still restricted to brand collaborations. We see that increasing to commerce via affiliate, social, performance, and barter and actual product sales. We see that kind of increasing over the next few years. So we see it being a multi-billion-dollar market. But I feel today, a creator can earn anywhere between 10 lakhs a year, going all the way to 10 crores a year, depending on who the creator is.
So Vijay, tell us, how many creators and brands do you have on board? If you could share some names, and also take us through your current business growth numbers and reach. And how are you making money? What is your revenue model?
We're a privately held company, so I can tell you that on the creator side, of course, like I said, we'll have about 15-18% market share. But as far as we are concerned, how do we make money? There's a platform fee, which is akin to any other tech platform in the world. Right now, by the end of the year, we'll have close to 1,000 advertisers that we work with. So from a scale perspective, I think we would be quite easily the largest. We represent 400 plus talent exclusively. We have over 200,000 creators on the Big Bang social platform.
All right, Vijay. Unfortunately, we've run out of time, but many thanks for joining us on Startup Street today, and wish you the very best with the Gruha's Collective Consumer Fund and for all your growth plans for the Collective Artists Network. Thank you so much for joining us today.
Thank you. Thank you for having me. Thank you.
Well, that was on Gruha's Collective Consumer Fund. Time for a short break. But coming up, SaaS accelerator fund Upekkha has announced the first close of its $40 million accelerator fund. We speak to its co-founder, Prasanna Krishnamurthy, on its investment strategy, outlook for 2024, and more. Stay tuned.
Well, software as a service accelerator fund Upekkha has announced its first close of the $40 million accelerator fund at $15 million, and this was led by Westbridge Capital. It aims to raise that total $40 million by the end of FY25. Now, Upekkha, which was set up in 2017, currently works with more than 165 startups and has a 300-plus community of SaaS founders. The fund is looking to invest in 200 early-stage SaaS startups in total, and as mentioned many as 70 this year itself. Joining me now to talk about this is its co-founder and managing partner, Prasanna Krishnamurthy. Prasanna, thanks very much for coming down to our studio to talk to us about this fund. Interesting name there, Upekkha. Tell us what it means.
Sure. It means perfect balance in Pali. So founders go through lots of ups and downs, right? Their life is like being on a surfboard on top of a wave.
Yeah.
But if they're not in perfect balance in that moment and they keep thinking about the previous fall or the next wave, they won't make it. They won't be able to make the right decisions.
Well, quite interesting. Keeping that in mind, what is the investment strategy now that you have this accelerator fund? You raised the first $15 million. What are you looking at?
Right. So I think, India SaaS is going to get to tens of billions of dollars in the next 10 years. We are in the very early innings of that game. And we aim to help domain expert founders, serial entrepreneurs who are getting into building B2B SaaS businesses for the global market so that they can earn in dollars but spend in rupees and get them on the ground floor and help them get that first 1, 2, 5, 10 customers globally.
So, you've raised this $15 million now.
Yes.
The remaining $25 million you're hoping to do by the end of the next financial year. Okay, do you already have, investors that have lined up? Could you close it before that? Do you have an option to perhaps go bigger than this 40 million that you're targeting?
Yeah, I wish we could close it soon so that I could go back to working with founders. I would love to do that. But, as you know, the market is a little slow. So we are trying to make sure that we are taking the right time to find the right investors who can stick with us for the long term. Because the very early stage investment game is a very long cycle game. It will take 10 years, 12 years, 14 years. So we need really patient LPs who will come with us for that journey. There are lots of folks who are ready to come in, but they're like, can you give a return in 8 years or 10 years? But that is not how it works in this game. It will take 12 years, 14 years.
Speaking of returns, the past couple of years clearly have not been the easiest.
Right.
Is the outlook getting better now?
See, ironically, right, Warren Buffett says, buy low, sell high.
One hopes to.
One hopes to. But if you see what's been happening in the market in 21 and 22, people were buying at insane prices. Right? And then now, when prices have moderated, people are not ready to buy. So what we are trying to do is we want to be very steady in our investment pace. And whether it's last year or this year, we want to do a good number of investments. Because this year, founders actually need that support. And they're coming into the market at a very fair price.
Okay.
And if we get in at a fair price now, by the time the next bull run comes in 5 years or 7 years, then the markup is good and we get a fair exit as well. So we're hoping to be a little contrarian and do more investments this year when everybody else is sitting on the sidelines.
But what is the return number that you're promising to your investors when you're going out to raise these funds?
So I'm not allowed to promise a return to our investors.
Okay.
But if you look at the Bloom report that I think you've seen, a 20+% IRR is what VCs have provided in the past, and we'll hope to be in the same range.
Given that this is early stage investment, what's the average ticket size that you're writing for each of these checks?
Sure. So we're doing a standard check of 125K.
Okay.
Because we do a cohort model. It's a batch model.
Yeah.
So we take a certain number of startups in the same stage in a batch and invest in them at the same amount. It's $125,000 for 7% of equity.
So you are in your 13th cohort now.
That's right.
Could you give us some details about how many startups you'd be looking to fund with this $125,000 each that you're preparing to write for them?
Absolutely. So with this fund, once we've raised the full 40 million, we should be investing in about 200 startups.
Okay.
And this year we expect to invest in about 70 startups.
So any names you could share with us? Who are these 70 lucky companies that are getting the money from Upekkha?
I can't share those names right now. Happy to do that a little later. But essentially, most people would not have heard of these startups because these are not B2C. These are very boring B2B companies that nobody would have heard of.
Well, I hope they're not hearing you say that. But, before we let you go, we're starting a new calendar year.
Sure.
There was about $11 billion of funding that was raised by startups last year. Seems like a decent number, but it was almost 75% lesser than what we saw the year before. So, this funding winter, all of these themes that have started to play out, do you think it'll continue going into 2024, or what will you as an investor watch out for?
Yeah, I think, the common adage is that when the US coughs, the rest of the world catches a cold.
Yes.
It looks like the US is recovering and recovering well.
Yeah.
And I'm hoping that will then sink into the rest of the world. Our markets per se have not been doing badly at all. We're at record highs both in the Nifty here and in the US.
Yeah.
So my belief is that towards the second half of the year, consumer confidence in the US will go up, spending will go up, businesses spending on software will start going up, and then that will start driving more founders to deliver revenues, which will then start delivering in terms of investments.
But any major themes that you'd be watching out for? I know you're very focused on SaaS, but anything that looks exciting overall?
Yeah, I think so. AI as an enabler for SaaS is going to become very powerful.
Okay.
It's not exactly clear how today. AI will help different types of SaaS companies deliver that value. But founders obviously are working really hard to figure out all the ways that are possible to do that. Some will fail, some will succeed.
Yeah.
But that, I think, is going to be the theme. India will become the AI capital of the world. We'll have more AI developers than anywhere else.
Okay, thank you very much for being here in our studio. It was a pleasure speaking with you, Prasanna.
Pleasure speaking with you as well.
Thank you. And on that note, it's back to you guys in the studio.
Well, that was Upekkha's founder being bullish on the fact that India will become the AI leader of the world. With that, it's a wrap on this edition of Startup Street. But before we go, we leave you with a wrap on the startup deals that happened over this week. Thank you for watching.